Hello students, this is your Mr. GST CA Vishnuvardhan. So this video is all about amendments applicable for your CA Inter November 2022 exams. So my dear friends who are preparing for November 2022 exams, you need not worry about your indirect tax amendments, that is especially the GST amendments, because they are not that heavy, very few amendments. Trust me, you'll be finishing in just like that. Only thing, there are some good amendments which are going to talk about good concepts, and there are some very good amendments in the uh, video right now. So the volume is not huge, but easy amendments, but the amendments are very good, so very important for your exams. So please be very attentive during this video. Fine. So without wasting further time, let us proceed with the amendments. Coming to the amendments chapter wise, if you take the statutory update, so chapter wise, first let us move on to unit number 2, supply. So under supply, what are the amendments we are going to see? Please understand, first of all, if you remember, section 7 subsection 1 is completely talking about what is supply. So in this section 7 subsection 1, if you remember, there is clause A, B and C which are talking about supply, and now they have brought in a new amendment, a new clause through this amendment, that is clause AA, my dear friends. So here I have given a notes which is easy for understanding and will be easy for you to revise, and taking the help of these notes we'll discuss this particular new clause which has been inserted in section 7 subsection 1, my dear. But before going into the clause, please understand this clause is mainly aiming to override the judgment which is given by Honorable Supreme Court in the case of State of West Bengal versus Calcutta Club Limited, my dear friends. So here, what is this particular clause all about? Let us understand. See, generally, if you remember, in your schedule 2, which talks about either a transaction is supply of good or supply of service, there is a point called any transaction, any supply made between unincorporated body or association from or to its members, then such transaction shall be treated as supply. But my dear friends, if you remember properly, there is a concept called doctrine of mutuality, where it says minimum there should be two persons to call the transaction as supply. That means I cannot make supply to myself and call it as a taxable event under GST and levy GST. So there was a concept that in schedule 2, the unincorporated body providing something to its members, or the members providing something to the unincorporated body, that was treated as supply. But this particular provision was declared as void by the Honorable Supreme Court because there were no two persons, because unincorporated body and its members cannot be treated as two different persons. So the Supreme Court has declared that provision as void, and hence then that type of transactions are not at all a supply, and the government cannot impose GST on it. So to override that judgment, the government has made a wonderful amendment by bringing a new clause in section 7 subsection 1, and that clause is clause AA, which says that any transaction between unincorporated body or association and its members shall be treated as supply, and please understand, the amendment is made so beautifully. They have given an explanation below this clause and said that doctrine of mutuality doesn't apply here. That is, the explanation says the unincorporated association or body and its members shall be deemed to be two separate persons for the purpose of section 7 subsection 1 clause A. There is a non-abstante clause, my dear friends, understand. That means notwithstanding anything contained in any other law for time being in force, for the purpose of section 7 subsection 1 clause AA, any transaction between unincorporated body and its members shall be treated as a transaction happening between two different persons, no matter whether they are actually different persons or not. For the purpose of this clause, We are assuming there are two different. That is what the amendment here, section 7, subsection 1, clause AA, my dear friends. So this is the notes for you to copy, and please understand this material, this PDF you can also download from the link which is available here in the description. So you need not worry about copying this. So the notes is available, the PDF in the description, in the link given in the description. So please you can download it from there. So hope the amendment is clear. Simple. Section 7, subsection 1, clause AA says any transaction between unincorporated body and its members shall be treated as supply without giving any focus on whether they are two different persons or not, because there is a deeming provision in the explanation saying that for the purpose of this clause, it shall be assumed that there are two different persons. That is, the unincorporated body is a different person and the members are different persons for the purpose of this clause. That is what the amendment they have made. So this is going to completely nullify the judgment given by Honorable Supreme Court. So that is what the amendment from this particular section, my dear friends. Hope it is clear for you all. Fine. So let us move on to the next amendment. So that is the only amendment in this particular unit, my dear friends, unit number 2, supply. And if you move on to the next unit, unit number 3, charge of GST. And again, there are very easy amendments here. What are the amendments? Here, if you see, if you remember composition scheme, conditions given for composition scheme section 10 subsection 2, it is clearly mentioned in section 10 subsection 2 that manufacturers of ice cream, manufacturers of pan masala, manufacturers of all tobacco and tobacco substitutes and aerated waters, these four manufacturers are not eligible for availing composition scheme benefit, my dear friends. Now, for this list, they have added few more products. That is the amendment here in this particular section, my dear friends. So here, what are the products that has been added? So, my dear friends, here they have added any manufacturer of fly ash bricks or fly ash aggregate where 90% or more is fly ash content, my dear friends. And also they have given fly ash blocks also, the manufacturers of these things. So what are these fly ash bricks, etc., etc.? You can see here in the image. So what we used to construct, whether the houses or any other buildings, they use this fly ash bricks, my dear friends. So manufacturers of that and manufacturers of bricks or similar siliceous earth, or manufacturers of building bricks, or manufacturers of earthen or roofing tiles. Manufacturers of these things are ineligible for composition now, my dear friends. So earlier, these four people were ineligible. These four manufacturers were ineligible. Now they have added four more people into this. That is the the manufacturers of fly ash bricks or fly ash where fly ash content is greater than or equal to 90%, or manufacturers of fly ash blocks, bricks of fossil meals, building bricks, earthening or roofing tiles. These manufacturers are ineligible for composition scheme. But please understand, the traders of these products are very much eligible for composition scheme, my dear friends. So please note this point. Manufacturers alone are played as ineligible for composition scheme benefit, but traders are very much eligible, my dear students. So that is the another amendment from this unit 3, and as I told, the amendments are very easy. The only amendment in unit number 3, that is the chapter number 3, whatever you call it. So this is the only amendment from that particular chapter, my dear. Hope it is clear for you all. Fine. So let us move on to the next chapter, chapter number 4, exemptions. And in exemptions also, obviously the exemptions are very easy. So we are going to discuss first the exemptions which got amended, number 1. Next, the exemptions which are newly added, and we will also see the exemptions which are withdrawn. So let us go with the first thing, the exemptions which got amended. See, there is an amendment in entry number 3 and 3A, my dear friends. If you remember entry number 3 and 3A, we understand generally, if you remember schedule 3, which talks about neither supply of good nor supply of service, and below that there are certain notifications given by the government telling which transactions are neither supply of goods nor supply of services. So here, let me summarize this story here. See, please understand. Already there is a notification saying that central government or state government or local authority providing the activities which are entrusted to panchayat or municipality under Article 243G or W of Constitution respectively. So central government or state government or local authority providing such activities to public are treated as neither SOG nor SOS, that is neither supply of good nor supply of service. But to provide these activities to the general public, the government may outsource this to others, outsource this to other entities. So these other entities, if they are providing that activities or services, obviously, which are nothing but interested to panchayat or municipalities under Article 243G or W, they are exempt if they are provided to government, state government, local authority. Earlier, the exemption was also available if there are other entities, the private players, are providing the similar things to governmental authority or government entity. Then also the exemption was there. But now, through an amendment, they have removed that exemption. So, if these other entities, the private players, are providing the similar activities to governmental authority or government entity, then it is very much taxable. Then it is very much taxable. That is the amendment here. So, amendment in entry number 3 and 3A put together we are discussing here. So, please understand, if the private entities are providing any services in relation to functions entrusted to a panchayat or municipality under Article 243G or 243W of the Constitution, it is provided to governmental authority or government entity. Earlier there was an exemption, now that exemption has been withdrawn. So that is the amendment here. Clear, my dear friends? So here, if you see in entry 3, what is the difference? In entry 3, it is pure services provided in relation to the activities entrusted to panchayat or municipality, Article 243G and W. And in entry 3A, if you see, where the services are at least 75% and goods not exceeding 25%. Entry 3 is about pure services provided, exempt. Entry 3A is all about, even though if it is not a pure service, if it is a composite supply also, there is a mix of services as well as goods, but goods value should not exceed 25% of the value of supply. So that is what entry 3 and 3A. So in both the cases, earlier the exemption was available if it is provided to both governmental authority or a government entity. Now that exemption has been withdrawn. So it is taxable now if the private players are providing these pure services or composite supply, where there is mix of services and goods value should not exceed 25% of the total value of supply. If these are provided to governmental entity or governmental authority or government entity now, then it is very much taxable. That is what the amendment. Clear? So that is entry number 3 and 3A amendments, my dear friends. Now exemption. Let us see what is the another exemption which got amended. That is entry number 15 and entry number 17. Both are talking almost about the same point, my dear friends. Almost the same point. What is that point? I will just summarize you here. We understand, if you remember entry number 15 and entry number 17, these entries will talk about exemption given for transportation of passenger services. So in those entries, if you see, there are 2 points. In transportation of passengers, if provided by non-AC contract carriage or non-AC stage carriage, are exempt from GST. So these 2 points, my dear friends, these 2 points These are given in entry number 15, and this point is from entry number 17, my dear friends. So, transportation of passengers by generally non-AC contract carriage or non-AC stage carriage is exempt from GST. And also transportation of passengers by metered cabs, auto rickshaws, and including e-rickshaws. This is also generally exempt from GST. But now, through the recent amendment, what the government has did is, if the transportation of transportation of passengers is provided by non-AC contract carriage or non-AC stage carriage or through metered cabs, auto rickshaws or e-rickshaws, if these services are provided through e-commerce operator and notified under section 9 subsection 5. If you remember section 9 subsection 5, 9 subsection 5 is a scenario where e-commerce operator is liable to pay GST on the notified services supplied through it. So in such cases, e-commerce operator is liable to pay GST. Correct. So here now the point is, if the transportation of passenger service is provided through e-commerce operator by these people, earlier it was exempt. Now, if it is provided through e-commerce operator and notified under section 9 subsection 5, even though it is in non-AC stage carriage, even though it is in non-AC contract carriage, even though it is in a metered cab, auto rickshaw or e-rickshaw, it is very much taxable. It is very much taxable, my dear friends. That is what the point here we have to understand. So earlier, non-AC contract carriage, non-AC stage carriage, metered cabs, auto rickshaws, e-rickshaws, you are transporting the passengers exempt. But now what is the condition? Now the condition is, see, if you are supplying these services of transporting the passengers through non-AC contract carriage, non-AC stage carriage, metered cabs, auto rickshaws, e-rickshaws, through e-commerce operator, then it is very much taxable, my dear friends. There is another amendment in the existing exemptions. So that is what entry number 15 and 17 amendments put together. The notes has been given here to you in a very simple format. Nothing complicated, very easy amendments. The only thing is we have to summarize it properly. That's all. Apart from that, not a major amendment. Hope it is clear. So fine. Let us move on to the next one, my dear friends. And one more amendment is in entry number 72, my dear friends. Entry number 72. What is amendment in this entry number 72? Understand. Earlier, any person who is conducting the training programs where the entire expenditure of the training program shall be borne by central government, state government, or union territory, then such a service provider providing the services to central government, state government, or union territory by way of conducting such training programs was exempt from GST. Now, the amendment was made in such a way that not the total expenditure, even if the expenditure at least 75% is borne by central government or state government or union territory, then such services by way of conducting the training programs by some private players or any training partners or etc. shall be exempt from GST. That means, for example, I am the training partner who is providing some training programs on giving some awareness on GST or giving some certification programs on GST to the students or graduates, where the central government or state government or union territory is paying me. It means the expenditure for the training program is borne by the government. So if that expenditure borne by them is, even if it is at least 75% also, now it is exempt from GST. Earlier, if the expenditure was totally borne by the government, then it was exempt. Now they have amended it in such a way that even if 75% is borne by the government, then it is exempt under GST, my dear. That is another amendment in entry number 72. Clear? So these are the entries which got amended, which are existing already and got amended. Now let us move on to some new exemptions which are brought into picture. New exemptions which are brought into picture. Fine. So one such new exemption is very easy one, entry number 61A. That is nothing but where the national permit is granted to goods carriage agents, goods carriage operators, etc. So the point is that consideration charged by the government or any other authority, prescribed authority, to give that national permit is exempt from GST. That means the consideration paid by the goods carriage vehicles, the owners or any other persons, to get the national permit for their vehicles, that consideration paid to get national permit is exempt from GST. Very simple. So that is the only exemption which has been added, and that is there in your amendments. And one more interesting thing is the last leg in this particular exemption, that is withdrawal of existing exemption. And if you see entry number 43, if you remember, the services of leasing of assets by Indian Railway Finance Corporation to Indian Railways was exempt earlier. But that exemption has been withdrawn by the government now, and it is taxable. Clear? So earlier, services of leasing of assets like any rolling stock assets, including wagons, coaches, logos, etc., etc., by Indian Railway Finance Corporation to Indian Railways was exempt earlier. Now that exemption has been withdrawn. So hope you are understanding it clearly. Exemptions we have discussed, the exemptions which got amended, the exemptions newly introduced, and the exemptions withdrawn. So new exemption, only one exemption, 61A. Exemption withdrawn, only one exemption, exemption 43 that has been withdrawn, my dear friends. That means now this is taxable. It is clear for you. And these are the only amendments which are there in your chapter number 4, exemptions. Hope you are feeling it very easy. So let us proceed with the next chapter, chapter number 6. In chapter number 6, input tax credit, don't worry by looking at the name, chapter number 6, input tax credit. So here you need not worry, there are no major amendments at all. Very, very simple and easy amendment, but very important amendment, my dear friends. That is, if you remember how the recipient will avail ITC, how the recipient will avail ITC. So in that there are various conditions, and one such condition is that for the recipient to avail ITC, the supplier should have filed his GSTR1 or IFF, invoice furnishing facility, and that GST amount should have reflected in the recipient's GSTR 2A or 2B, as the case may be, and then only the recipient can avail ITC. But there was a relaxation that sometimes my supplier might not have filed his GSTR1, and that credit is not visible in recipient's 2A or 2B, and hence I cannot claim ITC. Means there was a relaxation that up to 5% of the total credit availed, sorry, total credit available. That means even though some of my suppliers have not filed the GSTR1 or IFF and not given my purchase invoice details in their return, that means my purchase is automatically sale to the supplier. The sale to my supplier is my purchase. So you are my supplier. You have not filed your GSTR1, or you have not filed your IFF, or you have forgot to give the invoice details of which you have sold to me. In such cases, that is not visible for me in 2A or 2B. So I cannot avail ITC. So there was a relaxation that a 5% variation was allowed, if you remember. If you remember, there was a 5% variation allowed, my dear friends. But now, please understand, if the supplier has not filed his GSTR1, or if the supplier has not filed his IFF, or he has filed GSTR1 and IFF or IFF, but he forgot to give my invoice in his return, then it is not visible in my GSTR2B, and I cannot take ITC of it. That means the amendment is very simple. Amendment is very simple. They have brought in a new clause under section 16, subsection 2, and also they made the amendment in rule 36 sub rule 4 to give effect to this. and the effect is what? So my dear friends, now to put it very simple, for the recipient ITC shall be available only if his supplier has filed his GSTR1 or his IFF, and that has been reflected in the recipient's GSTR2B. So if at all it is visible in the recipient's GSTR2B, he can take it as ITC, or else he cannot take ITC. As simple as that. So just like how the relaxation was there earlier, so earlier there was 20% relaxation, then they made it 10%, then they made it 5%, and now they made it 0%. So only if it is reflected in your GSTR2B as a recipient, that means when it will get reflected in your GSTR2B, only if your supplier has filed his GSTR1 or IFF and gave your invoice details, then only it will reflect in your GSTR2B. Then only you can avail ITC, or else you cannot avail ITC. As simple. This is the amendment in your chapter number 6, input tax credit. Very, very easy and very, very, very important, my dear friends. Hope it is clear to you all. Fine. So that is what the concept, that is what the amendment from chapter number 6, input tax credit. Right. Let us move on to the amendment in next chapter. So chapter number 6 is done, the amendments. And see, now we are moving into chapter number 7, registration, the amendments. So here in chapter number 7 also, as I was saying, there are no complicated amendments, so nothing to worry. So what is the amendment now here? As you all are aware of, when you are applying for new registration under GST, you shall go for Aadhaar authentication. Now they have made it mandatory for even the existing registered persons under GST. That means those who have already applied for GST registration and got themselves registered under GST, now those people have to undergo Aadhaar authentication. So who has to undergo Aadhaar authentication? If you see the existing registered person, if he is already having an Aadhaar number, if he is already having the Aadhaar number, he shall undergo Aadhaar authentication. Who shall undergo? If it is a sole proprietor business, the proprietor. If it is a partnership firm, the partner. If it is a HUF, the Karta. If it is a company, the MD or whole-time director. If it is AOP or BOI, then it is any member. And if it is a trust, any trustee shall undergo Aadhaar authentication. And here, please understand carefully, if they have not done the Aadhaar authentication, if they are not undergoing the Aadhaar authentication, then they are losing certain luxuries under GST. What are those luxuries they are losing? Please understand, they cannot file any application for revocation of cancellation of their registration. If their registration is cancelled by the GST authorities, they cannot apply for revocation of cancellation of registration if their Aadhaar authentication is not done. They cannot file any refund application in form RFD01. They cannot file any refund application regarding the IGST paid by them on the goods exported by them outside India. So whatever the goods they are exporting outside India, on that whatever the IGST paid, that they cannot claim as refund. So these applications they cannot file if their Aadhaar authentication is not done. So not only these people, see now for example you get a doubt, sir, what if I have not allotted Aadhaar number? Then the law says you should first apply for Aadhaar card, and before the Aadhaar number is allotted, you can also proceed with Aadhaar authentication. That is, you use your Aadhaar enrollment number and your bank passbook with photograph or your voter ID or your passport or your driving license. Using these things, that is what, if you have not got your Aadhaar number, please apply for your Aadhaar number. The moment you apply for the Aadhaar card, then you will get Aadhaar enrollment number. Using that Aadhaar enrollment number, along with that, what you should do, you should also produce your bank passbook which has the photograph in it, or you can use your voter ID, or you can use your passport, or you can use your driving license and finish this Aadhaar authentication, my friends. So that is what the concept here. So if you are not doing Aadhaar authentication, then there is a Disadvantage for you, that means you are losing certain luxuries. What are those? You cannot file an application for revocation of cancellation of your registration. You cannot file an application, refund application in form RFD01, and you cannot file refund of IGST paid on goods exported outside India. Clear? So if you have Aadhaar number, then you can proceed with the Aadhaar authentication using that Aadhaar number. If you don't have the Aadhaar number, still you can use your Aadhaar enrollment number and other documents and finish your Aadhaar authentication. So existing registered persons, that means who have already got registration under GST law and they are doing business and carrying out the supply, the taxable activities, etc., etc. Those people are also supposed to go for Aadhaar authentication. That is mandatory now. Not only those who are applying for registration for the first, also those who have already got registered under GST laws, my dear friend. That is what the another amendment for you. So that is what the amendment in chapter number 7 registration, and one more amendment is there in chapter number 7 registration, my dear friends. That amendment is regarding the threshold limit for registration, a very important and a very easy amendment again. So what is this? My dear friends, if you remember, the threshold limit where you are exclusively dealing with goods in certain states, other than special category states and other than certain states. If you remember the states, there are certain states where the threshold limit is only 20 lakhs. Clear? So apart from those states, so my dear friends, if you remember, except special category states and except Arunachal Pradesh, Sikkim, Telangana, Uttarakhand, Meghalaya, and Puducherry. So apart from these states, remaining all other states. And here, for the purpose of this section 22, special category states means only what? Manipur, Mizoram, Tripura, and Nagaland. These 4 states and 6 other states, Arunachal Pradesh. So totally 10 states, my dear friends. Please understand. That is Manipur, Mizoram, Tripura, Nagaland. These are the special category states for the purpose of section 22, and 6 other states, that is Arunachal Pradesh, Sikkim, Telangana, Uttarakhand, Meghalaya, Puducherry. See, if you see, apart from these states, in remaining all other states or union territories, if you are exclusively dealing with goods, if you are exclusively dealing with goods, the threshold limit for registration is 40 lakhs. Threshold limit for registration is 40 lakhs. But this benefit of threshold limit 40 lakhs is not applicable if you are dealing with ice cream, if you are a supplier of ice cream and other edible ice, if you are a supplier of pan masala, if you are a supplier of tobacco and tobacco substitutes, earlier these are the only goods. For these cases, if it is only 20 lakh threshold limit for registration. Now they have added some other items also. Hope you remember these items. Just now we discussed regarding these things in composition scheme. Here also we are discussing. For these people now, the threshold limit for registration is not 40 lakhs, it is 20 lakhs only. So please understand, generally persons exclusively dealing with goods, in these states. How to remember these states? There is a code MMTN. Make my trip to Nagaland, Manipur, Mizoram, Tripura, Nagaland. These are the special category states for the purpose of section 22. So here the threshold limit is 10 lakhs, my dear friends. Here the threshold limit is 10 lakhs. And here for these states, how to remember these states? Please understand, all of you watch cricket. And in cricket, how many stems will be there in the ground, my dear friends? Three stems are three stems one side and three stems the other side. So there will be totally six stems. So the code here to remember is 6 a stump. The code 6 a stump. So A for, that means 6 states. A for Arunachal Pradesh, S for Sikkim, T for Telangana, U for Uttarakhand, M for Meghalaya, P for Puducherry. So in these states, if you are exclusively dealing with goods, is 20 lakh threshold limit. So please understand, not only exclusively dealing with goods here, in these states, if you are dealing with goods or services or both, the threshold limit is what? 10 lakhs. Here also, no matter whether you are dealing with goods or no matter whether you are dealing with services or both, the threshold limit is for registration 20 lakhs. In other states, please understand, in other states and union territories, states or union territories, if you are dealing with exclusively goods, then it is 40 lakhs. Exclusively services, then it is 20 lakhs. Or you are dealing with both goods and services, then also it is 20 lakhs. While covering the amendment, I'm covering almost the entire section 22, I guess. So this 40 lakhs benefit was not available only to these three items earlier. Now they have brought in an amendment now. They have brought in an amendment now. They have and also added these four items. That means these fly ash bricks or fly ash, to fly ash blocks, bricks of fossil mills, building bricks, earthening or roofing tiles. For these people also, people dealing with these goods also, the threshold limit for registration is 20 lakhs. 40 lakhs is not applicable. 40 lakhs is not applicable. That is what the amendment, my dear. What the amendment. Hope you are clear with this. Hope you are clear with this. Right? Yes. Right. So that is what the another amendment in chapter number 7, registration. So that is the only the last amendment in chapter number 7, registration. Let us move on to the next chapter, chapter number 8. In this chapter also, not major amendments here. The simple amendment, that is, my dear friends, regarding e-invoicing. If you remember e-invoicing provisions are applicable earlier for those people whose aggregate turnover in any preceding financial year from the financial year 17-18. That means if you see from 17-18, that means either 17-18 or 18-19, 19-20 or 20-21. Now we are in which financial year, my dear friends? 21-22 over 22-23 we are in, correct? So for 22-23 financial year, when e-invoicing provisions are applicable, in any preceding financial year, that means either in 17-18 or 18-19, 19-20 or 20-21 or 21-22, in any preceding financial year, if the aggregate turnover has exceeded 50 crores, then in 22-23 e-invoicing provisions are applicable. That was the story. But now, through an amendment, they have reduced that limit from 50 crores to 20 crores. So for financial year 22-23, when e-invoicing provisions are applicable, my dear friends, the e-invoicing provisions are applicable if in any financial year, that is 17-18 or 18-19 or 19-20 or 20-21 or 21-22, in any one of the preceding financial year, if the aggregate turnover of any person, aggregate turnover means what? On pan-India basis, the turnover has exceeded 20 crores in any financial year, then for such registered person, e-invoicing provisions are applicable. Simple. Earlier the threshold limit was 50 crores, sorry. Now it was made 20 crores. Clear? So there is the amendment here. Nothing to worry. No major amendment. The threshold limit alone was changed. And one more amendment in this particular e-invoicing concept is e-invoicing was not applicable earlier to special economic zone units, SEZ units, units in SEZ, not SEZ developer, units in SEZ, and insurer, banking company, financial institutions, including NBFCs, GTAs, who are engaged in transportation of goods, supplier of passenger transportation services, and who are also exhibiting the cinematographic films. For these people, e-invoicing provisions are not applicable. Now there is an amendment saying that these e-invoicing provisions are not applicable even for a government department and a local authority, even though they are satisfying the condition. For this, government department and local authority also now e-invoicing provisions are not applicable. So if you understand in e-invoicing, what are the amendments, my dear friends? In e-invoicing, the amendments are only two. Amendment number one is the threshold limit. The threshold limit is reduced to 20 crores now. Clear? And the another amendment, if you see, the another amendment is e-invoicing provisions are not applicable to e-invoicing provisions are not applicable to number one, government department, number two, local authority. That is what the amendment, my dear friends. So only two amendments with respect to e-invoicing. Very simple amendment as well, but very, very important. So let us move on to the next amendment. The next amendment is nothing but regarding dynamic QR code. So what is the amendment here? Actually, that is not an amendment, just a clarification, my dear friends. And as you all are aware of the fact for whom dynamic QR code provisions are applicable, see, the dynamic QR code provisions are applicable as the same story what we have discussed in e-invoicing provision. From 17-18 financial year, in any financial year, if the aggregate turnover has exceeded 500 crores, then that registered person shall give a dynamic QR code on the invoices given in case of B2C supplies. Now, there was a doubt that person holding UIN number, unique identity number, remember for whom it is granted? For certain multinational agencies, just for the purpose of applying refund on the notified purchases made by them. They will get a unique identification number. They are not registered under GST, my dear friends. So the persons who are holding this UIN purchasing something, that means the sale made by you to a person holding UIN is a B2B supply or a B2C supply. It is very much a B2C supply. It is very much a B2C supply. It is not a B2B supply. The supply made to a person holding on UIN is not a B2B supply. It is also a B2C supply, and hence, if dynamic QR code provisions are applicable to you, then the dynamic QR code shall also be mentioned on the invoice issued to such person who is holding this UIN number. That is what the amendment, very simple one. So any invoice issued to such person having a UIN, shall be considered as an invoice issued for a B2C supply and shall be required to comply with the requirement of dynamic QR code provisions. That is what another amendment. To be clear, it is a clarification rather than an amendment, my dear. So that is the next thing. Now, let us move on to the last amendment with respect to this particular chapter, chapter number 8, and that amendment is related to e-way bill provisions, my dear. E-way bill provisions. So, what is this amendment? Again, a very simple amendment. What is this amendment? If you remember, in terms of Rule 138E, which talks about in what cases the generation of e-way bill shall be blocked. So, please understand, Rule 138E talks about blocking of e-way bill generation. Clear? So now, when Rule 138 is triggered and e-way bill generation is blocked, in such cases, for you, for example, you are falling within Rule 138E, maybe not filing the returns, etc., and your e-way bill generation is blocked. In such case, you cannot generate e-way bill. And my dear friends, when I say you cannot generate e-way bill, please understand, when you are generating an e-way bill, when you are generating an e-way bill, you should give the details of the supplier GST identification number as well as the recipient's GST identification number. Correct. So earlier, please understand, earlier, if e-way bill generation is blocked, then that particular person's GSTIN cannot be entered in suppliers column or recipients column. Please understand, that means my e-way bill generation is blocked. My GSTIN cannot be given in a supplier's GSTIN column or recipient's GSTIN column. That means on my purchases also I cannot generate e-way bill. On my supplies also I cannot generate e-way bill. That means on sales also e-way bill generation is not possible. On my purchases also e-way bill generation is not possible. That means if I'm selling something, I cannot generate e-way bill to my customer and give. If I am buying something, my seller to send the goods to me, if he wants to generate e-way bill, he cannot generate that. That means that GSTIN cannot be entered in either supplier GSTIN column or recipient GSTIN column. That was the case. But now the amendment is made in such a way, you cannot fill it only in supplier's GSTIN column. You can fill it in recipient's GSTIN column. That means if I sell something, my e-way bill generation is blocked. If I sell something, if I want to generate an e-way bill to transport the goods from my location to my customer's location, I cannot generate e-way bill. But if I buy something, if I'm buying from you, you have to send your goods from your location to my location. In the e-way bill, you will enter your GSTIN as a supplier's GSTIN and my GSTIN as a recipient's GSTIN. Whether the e-way bill will be generated? Yes, now the e-way bill will be generated. That means now when the e-way bill generation is blocked as per Rule 138E, in the capacity of recipient, if the e-way bill is generated, the e-way bill gets generated. But in the capacity of supplier, if you are trying to generate the e-way bill, that will not get generated. That is the relaxation given now. So if your e-way bill generation is blocked, only you will be punished. That means on your sales, you cannot generate e-way bill. But your suppliers, they should not be punished, correct? So if they are selling something to you, they can generate e-way bill by giving your GSTIN. in the recipient's column. Clear, my dear friends? So amendment is GSTIN as a supplier, you cannot enter. But GSTIN as a recipient, now you can enter. That means e-way bill generation is blocked only on e-way bill generation is blocked only on sales. Blocked only on outward supplies. On outward supplies only now. Here, my dear friends, on your inward supplies, very much your supplier can raise an e-way and transport his goods to your. That is what the amendment. So this is the only amendment in chapter number 8, my dear friends. So you can copy this, you can copy this. Hope it is clear. So very simple amendment, right? Guys, the amendments are very simple, but they are very, very important for you, your main exam also. Fine? Yes. So let us move on to the amendment in the next chapter, chapter number 9, payment of tax. A very, very simple thing. The only thing what is that they are trying to tell us here is, please understand, they have made an amendment in Rule 86A, that is, please understand, as per Rule 86A, if the commissioner or any officer authorized by him, not below the rank of assistant commissioner, if they have reasons to believe that whatever the ITC available in your e-credit ledger, obviously whatever the ITC we are taking through filing GSTR 3B and seeing GSTR 2B, etc., some balance will be reflected in your e-credit ledger. So, if the commissioner or any officer authorized by him has reasons to believe that whatever the ITC available in that e-credit ledger is either ineligible or has been fraudulently availed, then in such case what they can do, they can disallow that credit to you. They can disallow that credit to you, my dear friends. Able to understand? Disallowing the debit of amount from credit ledger means they will disallow you from utilizing that credit ledger balance when they have reasons to believe that you have availed that ITC even though you are not eligible, or by some fraudulent means, is either through bogus invoices, etc. They have that reasons to, then they can block that credit and stop you from using that ITC balance. Now the point is, on what grounds they have the reasons to believe that you are not eligible for that credit or you have fraudulently availed. Means please understand the grounds can be seen any one or more of the following grounds, my dear friends. What is the first ground? See, the first ground is from whom you are claiming that you have availed that credit. That fellow is not at all existing. That means you are claiming that I have availed credit from Mahendra Bahubali, who is not at all existing, or that fellow is existing but not conducting the business from the declared place of business in the registration. That is one case. Is either that fellow is not existing from whom you are claiming that this fellow has sold goods to me, or he is not carrying the business from the place where he declared in his registration application. Sir, I will do the business from this. Like that, he has declared a place. From that place, he is not doing the business. In such case, or you have availed the credit on the invoices or debit notes without actually receiving goods or services or both. That means the fake invoices or bogus invoices, my dear friend. You have not received the goods. That means that fellow has not sold you the goods. He has sold you the invoices. Take this invoice and avail GST credit, like that. So without receiving goods or services or both, you are receiving the invoice. Such case. Next, the invoice or debit notes on which you are claiming credit, that GST has not been paid to the government. That GST has not been paid to the government by your supplier. He might have collected from you, but he has not remitted it to the government. Or you have not paid, and that will also not pay to the government. You have not paid to the supplier also not paid to the government. But you have availed ITC. So the commissioner may disallow that credit. Or who is, see, this is one interesting thing. The registered person claiming the credit is found to be non-existing. Whoever is claiming ITC, that fellow is not existing. Right. Crazy point. Or you are found, you are existing, but you are not carrying on the business. You are not carrying on the business from the declared place of business. I told that, sir, I am carrying on the business from this particular location, but from that location, I am not at all carrying on. Then the ITC can be rejected, disallowed by the commissioner. Fine. What is the last reason on what ground the commissioner may disallow the credit? The credit on based of the credit what I am availing it without having any documentary evidence, without any invoice or debit note or any other valid document. No documentary evidence with me to show that, sir, based on this documentary evidence, I am availing. No documentary. Clear? So these are the grounds based on which the commissioner or any authorized officer below, not below the rank of assistant, can disallow the credit to any register. Okay? Amendment, my dear. This is the last amendment from this chapter. Chapter number in payment of tax. Now, the last chapter, chapter number 10, returns. From this chapter, what is the amendment? So the amendment from this chapter is very simple, my dear friends. That is regarding maximum late fees. Maximum late fees in case of delay in filing GSTR 1 and 3B and also GSTR 4. Fine. So let us summarize that. Now, please understand. So, my dear friends, the late fees is relaxed actually for GSTR 1 and 3B. So, please understand, GSTR 1 or 3B, there is a delay in filing. If that GSTR 1 or 3B is a nil return, then the maximum late fees shall be only 500 rupees, my dear friends. That is 250 rupees under CGST and 250 rupees under SGST. Clear? If it is not a nil return, then please understand, based upon the aggregate turnover in the preceding financial year, when if the GSTR 1 or 3B is not a nil return, then based upon the aggregate turnover in the preceding financial year, the maximum late fees shall be fixed. So here we are not discussing the late fees, we are discussing the maximum late fees, the upper limit, the cap, how much shall be the maximum late fees. That is what we are discussing here. We are not discussing the late fees. Clear? Now, if the aggregate turnover in the preceding financial year is 0 to 1.5 crores, that means if the aggregate turnover in preceding financial year has not exceeded 1.5 crores, then if there is delay in filing of GSTR 1 or 3B, the maximum late fee shall be 2000 rupees only. That is 1000 rupees under CGST and 1000 under SGST. Yeah. But if the turnover is more than 1.5 crores but not exceeding 5 crores, then the maximum late fee shall be 5000 rupees, 2500 under CGST, 2500 under SGST. If there is delay in GSTR 1 or 3B filing and your aggregate turnover is exceeding 5 crores, then the normal maximum late fees cap given in section 47 is applicable. That is 10,000 rupees, 5,000 rupees under CGST and 5,000 rupees under SGST. So that is what the late fees maximum cap, upper cap, here the relaxation has been given. Earlier, it was the late fee for everybody. 10,000 is the maximum late fees payable by anybody, irrespective of their turnover. 5,000 under CGST, 5,000 under GST. But now, based upon their aggregate turnover in the preceding financial year, the maximum late fees has been relaxed. Okay? This amendment is not the latest one, even it was there in the previous RTPs also, previous statutory updates also. It has been continued now also. Fine. Yes. Hope you are already aware of this particular amendment. And maximum late fees for GSTR4 delay in filing of GSTR4 is, if there is a nil return, then the maximum late fees for delay in filing GSTR4 is 500 rupees, 250 rupees under CGST, 250 rupees under SGST. If it is not a nil return, then maximum late fee is only 2000 rupees under SGST. This is what the amendment, my dear friends. This is what the amendment with respect to late fee, and not late fees, maximum late fees payable, to be even more particular. So it is a maximum late fee payable. So this is what the amendment in chapter number 2 returns, my dear. Hope you are clear with this. So that's all about the amendments. And this amendment, I don't know why they are giving it in every statutory update. The filing of GSTR 9C has been done away with now, where there is a requirement of GSTR 9C. The reconciliation statement shall be certified by a chartered accountant in practice or a cost accountant in practice. That has been now done away. Now there is no such requirement that GSTR 9C shall be certified by a practicing CRCWA. There is no such requirement, and that amendment has been given effect from 1/8/2021. So it is not a latest amendment, nothing to worry. So you can just ignore it, my dear. So with this, we are done with all the statutory updates given in your update applicable for November 2022 exams, right? So hope this amendment video lecture is useful for you. So I wish you all the best for your upcoming November exams, and focus very well and have the conceptual understanding over GST, my dear friends, so that in taxation paper, this 40 marks will be very helpful for you to score exemption and good marks in this paper for taxation. So wishing you all the success, and please, please, please give your valuable feedback on this video in the comment box, or even personally to me through Instagram. So my Insta ID is CA_Vishnu_Vardhan. So please give your valuable feedback and suggestions on this amendment video. Hope this is useful for you all. So please note down my. So you can give your valuable feedback here and also in the comment box. So CA_Vishnu_Vardhan. Thank you so much. Hope this video is helpful to you all, and wishing you again all the very best for your November 2022 exams. This is your CA Vishnuvardhan signing off. Thank you.